welcome to another edition of Market Marauders, beating the market one trade at a time. First things first, hit that subscribe button down below, like, comment, share. Let's dive into it. So, today I'm going to give you my top 3 penny picks for the week. So the first one on the list, I have AHPI. So that's Allied Healthcare Products Incorporated. So if we look at their chart, their moving average 50 is above. Moving average 50 is 121. Their moving average 200 is 147, and they're currently at 290. So they are above their moving average 50 and 200, and they are on a little bit of a breakout since the beginning of December, and it's continued to grow well on to the new year, to January. And the amount of volume has increased as well too. So if we go to another one of their charts, we can see the breakout was pretty dramatic. It went from 151 in one day to 290, so shot off pretty high. And let's go into press release, because I like to give you all background information on to why I have these picks, because they're not just random. This is the article that really did it. So it says St. Louis public company says it's back in compliance with NASDAQ, and that company is Allied Healthcare Products Incorporated. So said it believes the appointment of a new board member puts it back in compliance with NASDAQ stock market listing rule regarding the makeup of its audit committee. So basically, it's saying that they are NASDAQ compliant, which is always good for a company to be NASDAQ compliant, and it's a good thing for investors to show that the company is NASDAQ compliant. A lot of times when companies aren't NASDAQ compliant or on that warning list, they have a bunch of actions that they take, like reverse splits and, you know, shifting around of different CEOs and board members. It's a pretty dire situation when it comes to not being NASDAQ compliant, or really close to not being NASDAQ compliant. So the fact that this company is saying that, hey, they are NASDAQ compliant, is a good thing, and I expect this stock to continue to grow moving forward in the future. So my number 2 stock, ticker sign BPMX, Biopharm X Incorporated. Corporation, not incorporated. So if we look at this stock, its moving average 50 is 39 cents a share, and its moving average 200 is 60 cents a share. And, since about the end of November, it took a little breakout. It went up a little bit around the 9th of December. Then it kind of plateaued down a little bit, and then it went back up at the end of the year, and then it came back up again and went back up to where it is now. The volume, you can also see the volume increased quite a bit as well, and it's always a good thing when you have volume as well as the increase of the share price. So going into, here's another chart. Let's go to the 5-day chart. Now, if we look at its 5-day chart, it started at 50 cents and it ended at 81 cents. So, like a 31 cent increase. That didn't go straight up. It wasn't directly exponential. It had a lull down around the 20th of January, 21st January. It went down to 58 cents. Then it came back up to where it's at. It went up to 85 cents, 86 cents, then it went back to where it's at 80 cents. So let's go into some of the news. So on December 10th, they gave their earnings. It says for the third fiscal quarter ending in October 31st, total operating expenses were 2.1 million compared with the operating expenses of 4.4 million the prior fiscal third quarter year. So it basically shows year over year that their operating expenses went down almost in half, a little over half. So that's always good. Net loss for the fiscal quarter ended October 31st was 2.1 million or 0.14 per share, compared with the net loss of 4.4 million per share during the prior fiscal third quarter. Excluding stock-based compensation expense, non-GAAP net loss for the fiscal quarter ending October 31st, 2019 was 1.9 million or 0.13 per share. During the quarter of the prior fiscal year, the comparable non-GAAP net loss was 3.7 million or 0.49 per share. Cash and cash equivalents were 1.4 million as of October 31st. So it just shows you that they're spending less money, which is always a good thing, and they're trying to control their burn rate. Um, Companies burn through money all the time, and if you're an investor, you want to see a company that has a controlled burn, that's not burning through money like crazy, and it seems to be no stop, because that dips into revenue, and you never want to see a company do that. Uh, and if you do, that should be a red flag for people who are new to investing in stocks. Companies that burn through lots of money, it's very hard for them to be profitable. Now, there's no company that I know of that does not burn money, that does not go and spend money on different expenditures, different investments, to try to make their company look better, to get more contracts and things of that nature. Money burning is gonna be a thing, but when companies uh, lose lots of money quickly, it definitely raises red flags. So to showing that they have this under control and that they're kind of fanning the flames in this point of view, then that's a good thing with the company moving forward. Then down to my number three stock. So number three, I got ticker sign INO. So NOVO Biomedical Corporation. So if we look at their current price, and by the way, all these prices are as of yesterday. So yesterday the market closed, which is a Friday on the 24th, and today is a Saturday, so the market's not open. So these are the prices in regards to those 2 days. So if we look at here, the moving average 50 is 292, and the moving average 200 is 279. So it ended on Friday at 424. So it is well above both its moving average 50 and its moving average 200. So if we look on here, its volume was up a lot, and it kind of had a breakout. It took like a small breakout around the 9th of December, and then it went up to probably like 37, and then it did another breakout. So let's look at a different chart of it on here. And let's go to the 5 day of this one. So yeah, if we look at down here, it had a little breakout. It went to 357, and then it had some dips through here, and then it went down back again, almost to where it was at around the 20th or around the 17th, and then it went down on the 22nd and stayed around 345, uh, between 334 and 345 range. Then it had another small breakout where it went up to 390, and then it went back down, but it didn't go down as far as it was, and it rose up some more. But then on the 23rd, it had a dramatic increase where it shot up all the way to 466 from three, let's say around 379, and then it came back down to where it's at now at 424. So it's a pretty dramatic increase in its 5 day. So let's dive into it and see what's going on with the company. So this is the main article. This came out the 23rd. So if we look at the graph, that's right around the time that the stock shot up. So on the 23rd, in Inovio selected by CEPI to develop vaccine against new uh, coronavirus. So that's a pretty huge undertaking for any company. Because if you guys been following the news, the coronavirus is a virus that's in China and is quickly spreading to other countries, and is affecting a lot of people's lives in a negative way. A lot of people are dying from it. So for a company to be signed up by the Coalition for Epidemic Preparedness Innovations, which is what CEPI is, uh, that's a huge undertaking. And they got a grant of $9 million to develop the vaccine against recently emerged strain of coronavirus, 2019 NCOV, that has killed numerous people and infected hundreds more in China to date. This initial CEPI funding will support Innovo's preclinical and clinical development through phase 1 human testing of INO 4800. Its new coronavirus vaccine matched the outbreak strain. CEPI previously awarded Inovio a grant of up to 56 million for development of vaccines against Lassa fever and Middle East respiratory syndrome, also caused by coronavirus. So the MERS was the other one. So this company is going to be basically running on all cylinders to try to get this virus, this cure for this virus. And I think any company that is involved in finding a cure for this virus is going to be a good stock to invest in, and definitely a front runner for economic growth. Because, you know, a grant of 56 million and a grant of 9 million are not small amounts of money by any means. And they've also proved that you know they're able to develop uh, vaccines against this Lassa fever and MERS. So you know the fact that they have a track record already and that they're being funded to continue on work is always a good thing. And I think the stock will grow. Out of the top three, I think this is like one of the biggest ones that I can see growing in the future, just because it's a company that's helping a worldwide issue. It's not just an issue tailored towards China. It's an issue that affects the whole world. So, you're essentially going to have the whole world buying your product when it comes out, which is going to be this vaccine. So I know they're probably not the only company that's doing it. That's probably trying to develop it, but this is one of the companies that stood out to me that was on track for a cure. So the fact that they're on the track for a cure and that they've published it in a press release, I feel like once that news comes out even more, the stock price is gonna shoot up even more and rally based on the fact that now people know, okay, this company is trying to develop a vaccine, and the market uh, is going to basically respond to that. Supply and demand. They have a huge supply. They have a huge demand and they have like no supply. So when you create the supply for the demand, that's just money that's just continuously coming in for this company. So I think out of those top three, INO is probably like my number one. But the other two, I think, also can be profitable. It just all depends on your price point and what you're willing to invest. I know INO was the most expensive out of the three. I think, let me look at this one. Yep, INO is the most expensive out of the three, being at 424. But I think it's the one that can yield the most profitability in the long term, just because the line of work that they're going in. Um, AHPI, I think it can be profitable more recently than not, and BPMX I think can be profitable as well too. But um, yeah, those are my top three uh, penny picks. Drop a comment down below. Tell me what you guys are looking at. Tell me if you think INO is going to be as profitable as I'm saying it is, or drop a comment down below and tell me what other pharmaceutical companies that you guys are looking at. I know pharmaceuticals and health service companies kind of shot up when news of this virus broke. So, this is not the only stock out there. This is just one of the ones that I found. But there may be some other companies that are more directly linked to helping find the cure of the coronavirus, as well as, hospitals, medical supplies, things like that. Companies that supply those are always good investments in times like these. So, make sure you hit that subscribe button down below, like, comment, share, and I'll see you guys next time. Peace.